let's take a look at that older cycle extreme here. It was that cycle extreme back in June, I believe it was June 2021. All right, so what happened at that cycle extreme? You have that cycle extreme right here. Momentum begins to move higher and price actually begins to move lower in order to create a diversion until you get double consistent positive momentum cycles on the 1 and 4 hours and the market takes off. So for a while, you're going to have a rise in momentum and you have a depreciation in price. There is, of course, some kind of a supporting pattern and the neckline and the market takes off. So we have to observe this now very, very closely here. So if we get a cycle extreme, we are going to have a rise in momentum and a fall in price. We are at that neckline. But we must have degree 3 momentum on the 1 hour in order to initiate a rise in price. Okay, so that rise in price does not only take us to 32,000, we're just showing 32,000 on that 4-hour charts. So first, we want to focus very strongly. We're going to have a rise in momentum, there must be, and a fall in price. Of course, we're right now having a fall in price so long as we do not have positive momentum on the 1 hour. Once we get positive momentum on the 1 hour, we begin to get a rise in price. And at that point, we are not only going to 32, we're looking here at 33,000, just below that neckline that we have just broken out of. If we get positive momentum, we actually do that second shoulder, all right, at level 1. Okay, so we do that second shoulder at level 1, comes in at 36,000, comes in even maybe at 37,000. Over here, you have even potential to see 39,000. You must by then, of course, have dual positive momentum cycles. We're looking at positive momentum on the 4 hours, positive momentum on the 1 hour in order to be able to attain 36,000 levels, level 4 here. You're equating this level 4 here with that level 1. So you would take it all the way to 36, all the way to 39. So we're not, of course, yet having this kind of momentum pictures. This is not yet going to happen. It's not going to happen next week. It's not going to happen on the weekend. I don't think so, because the momentum picture does not show it. But we are showing it because this is what to expect towards the end of the week. If there is no flash crash, if there's no capitulation down all the way to 18,000 levels and 20,000 levels, the market will have stabilized. Yes, and meaning this, that it is beginning to show positive momentum on the 1 hour, takes you to 33,000. If there's always a positive feed coming out of the 1 hour, it will feed into the 4 hours that take you to 36 and 37,000. This is what is to be expected next week. The situation could improve if, again, there is no capitulation. If there's no capitulation towards the weekend and next week, if we do not get capitulation over the coming 72 hours, 3 days, if this does not fall all the way to 24,000 and 22,000 and even break lower, then the market is stabilizing and we must be seeing positive momentum at least out of the 1 hour to take us to 33,000 and 32,000 levels. And then the feed continues to become positive and there is a short-term correction to do that shoulder. The market is still bearish, will fail. We're simply seeing the double head and shoulders because of the negative momentum now on this negative momentum here. This is a degree 3. This is called on the daily, a degree 3 will be followed by a degree 5. So last time we had this cycle extreme on the daily, that was to a degree 3. It did a 4 and that 5 truncated with that 3. It did the same levels at level. So it at least will do again the same levels because this kind of structure, momentum structure, must be followed by wave 5. But we would want to be correctly positioned in wave 4. Wave 4 takes you, this is a wave 4, so it's a strong wave. This shown here, wave 4, takes you into another shoulder level, and that could mean you're going to be seeing 36,000 if you're below level 1. If we have something internally wrong inside the structure or not seen, we go to higher degree level 1. Of course, 39,000, 40,000, that yellow level. It's still a shoulder. and it would still do a wave 5 down. You're seeing now the yellow labels are 1 and 2, the 3 here in yellow, a 4 here in yellow, all the way at 39,000. That's very small 4. Before you get to do another 5 in yellow, maybe even back to 22,000. But if the market stabilizes, that 5 in yellow just takes you probably to 26, 27,000. Let's not jump the gun, right? Right now, we need to be focused as traders that the market is going down so long as when we go live, we see negative momentum on the 1 hour in particular, right? And the 4 hours, this is still a cycle 3. We're going to be doing 24,000 levels, 22,000 levels, maybe even capitulation across the weekend. If the momentum improves next Monday, becomes positive on the 30 minutes and beginning to show positivity on the 1 hour, then we know we're going to 33,000 levels, that next neckline. If there's still more positivity, we're really doing a degree 4. It's either going to be 36 or 39, and the worst of this bear market is over. And all the reports that you're reading about that the crypto industry is done for and will no longer be there by the end of the year, I've been reading this kind of reports, may not really be correct. Okay, so again, don't lose focus of the high degree picture. There was that report really that after the current bearish markets in cryptocurrencies in particular, some of these altcoins will not be there. They will simply get extinct. We're looking in particulars like Luna. There is one of these altcoins, it's called Luna. It was at $64 and it crashed to 1 cent. I'm sure many of you have heard about it. So of course, some analysts actually predict that by the time this current bear market is over, you really will find that there are over right now 5,000 altcoins. Maybe they will become 500. That's of course an extreme projection, but let's see. All right, so let's go now to trading. We're going to be trading, this is our trade management chart today. We are half size short already, I believe, as of yesterday at 31,000 levels and these kind of levels. Let's take a look at the structure, the internal structure. Again, we realize we're trading from level 3 here in yellow all the way to level 5 in yellow. Forget about that 3 in English new. All right, so that level 5 in yellow already has done a level 1 in white and a level 2, and internally 1, 2, 3, 4, 5. This is the 3, was doing the 4. It's moving in a wedge because this is of course a basing formation. A basing formation usually does an ending diagonal or a wedge, or a leading diagonal, sorry, or a wedge. This is a very volatile issue, and therefore the swings are wide. It will be a wedge. This is of course speculative. But across the weekend, if you get a flash crash, it's going to be a wedge. If you get a flash crash all the way to 22,000, then of course you're looking at a wedge. Okay, so what we're doing is we are already short half size at 30,700, even 31,000, I believe. We have a stop or a hedge at 33. Over here it's showing at 32,296, but in reality you want it to be at 33. Now I understand the relevance of that 33. 33 is very close to the neckline, it's very close to what have we been showing on that daily chart. You break up all the way to 33, it must be on positive momentum. Good positive momentum on the half-hour charts would mean that we're doing a degree 4 and we had better get hedged to protect ourselves.